Welcome back, everyone. I'm Severino, your personal business coach, and I am here to help you on your journey to financial freedom. I help you with marketing and sales. That's my superpower as a coach. And I help you also with having multiple income streams and investing some parts of those profits into assets that will work while you sleep. Today, we focus on the assets that will win over the next 15 years. The thesis is, and as a strategy advisor, I always look for strategic advantage because we don't know what's going to happen. If you buy Google, Meta, or Amazon, we don't know which one will win. So how do we decide? We decide by picking the ones that have the highest upside and the lowest risk. How we will do that? My current portfolio went from minus 50,000 to today it's at $1,075,000. The plan is to double the worth of this portfolio every 3.8 years. So far, we are on plan. We are here in the fourth doubling, which is in 2024. So the next doubling, the fifth doubling will be 2028. Do you think we will achieve that? Let me know in the comments. And the target portfolio is a portfolio of companies that own the most important data, because my thesis is data is the new oil. So I want to own the companies that in 5 years own the most relevant data for society. They also have the highest pricing power so that they can monetize on that data. And they are capital light. Capital light means they have high profit margins, huge optionality, maneuverability. They can change direction whenever they want. And also, they are less prone to fluctuations. They are less hit by inflation. They are less hit by macroeconomic winds that come and go. Now, we will focus on the strongest pricing power companies and the strongest data companies that are capital light. And today I will share with you one that you've probably never heard of, and that one just entered our watch list. We plan to add that position. I screened all Fortune 500 companies through these lenses. Do they own the most relevant data? Do they have pricing power? Do they have network effects? Are they capital light? Are there high switching costs for their clients? So is there a stickiness there? Does the free cash flow per share increase year over year over the last 10 years? Same for operating income. Does the operating income increase? And does the return on capital employed increase? So this should be operating income. Now, with that checklist, we went through the top Fortune 500. We distilled the 20 that are the strongest in this field and that fulfill all these categories. And today we're going to dive into one of them that you've probably never heard of, and that is CME. Do you even know what CME stands for? CME Group is, let me make this bigger. CME Group operates the world's largest financial derivatives exchange with a vast array of futures and option contracts that are used by many investors and traders for both hedging risk, so risk management, but also just for speculation. They have commodities, currencies, equities, and they attract a massive global network. So I like also that they're global because if there is a conflict in one part of the world, they still have the rest of the world trading. And there is a vicious cycle because the more participants join, the more attractive the marketplace becomes, reinforcing the current dominance of CME's market position. There are high barriers to entry, both regulatory, technical, and reputation. So regulatory, if you want to launch a derivatives exchange, you will be required significant regulatory approvals and hoops and compliance. It's not easy to enter. The second is technological infrastructure. CME has invested heavily in robust and scalable trading systems, clearing, risk management infrastructure. So there's so much that they have already done. It is costly to build that infrastructure, and that is a barrier to entry. Reputation and trust. Decades of operations have built a strong reputation of reliability, integrity, which is crucial in the traditional financial markets. They are capital light, which gives them all this optionality. So there are trading fees. CME's primary revenue stream comes from transaction fees on trades executed on these exchanges. And then there are high margin. This model generates high margin and strong cash flow, as the incremental cost of facilitating additional trades is relatively low. It's like a software situation where adding new customer does not add costs to you, and that's why I love it. It's highly scalable. Then we have proprietary data. CME collects vast amounts of market data, providing valuable insights into trading patterns, risks, and market sentiment. And there are analytics services. Analytics, as you know, is one of the things that will become more and more important. Data is the new oil. So their analytics section leverages this data to offer analytics and risk management tools to its clients, furthering enhancing its value proposition. And they look at innovation and expansion. They have new products coming out continuously. They innovate new contracts as they expand into new asset classes. They adopt emerging technologies, and they run strategic acquisitions over different geographies. So this is CME, and you see now why they entered my screener. But it wouldn't be enough. Now they have to show us that they are data owners. They did. That they have pricing power. They did. That they have network effects. They did. The more traders, the more investors, the more worth. That they're capital light. They did. That they have high switching costs. That's the case. Now we have to check these three things. Does free cash flow per share go up? Does operating income go up? And is the ROCE increasing over 10 years? Return of capital employed. So now we dive into the numbers. And when we look into the numbers, we see a few things of interest here. First of all, the operating income, that's the blue one, is perfect. I've never seen a stock as perfect as this one in terms of operating income. Let me show you which one is the operating income. So operating income, whoosh. This is a trend line for operating income. And when you're increasing operating income over more than 10 years, that steadily, that gives me enough confidence this company is going to enter our portfolio these years. Free cash flow, same trajectory. This is the free cash flow trend line. So that is free cash flow per share, which tells us it's really well run, and they think also about shareholders. And then the return on capital employed has done like this, then slightly down, and now whoosh, it's rocketing up. So 3 trend lines that could not be more perfect. Then let's look at their GF score. It's 88 out of 100, so a high quality business with high growth and high momentum. In terms of valuation, their fair value is at $227. So they are right now priced slightly under their worth. And then my last check, because I don't trust my own intuition alone. I also want to see what teams with a lot of analysts have. And so I went to the super investors and went through all their analysts' research. In Q1 of 2024, 85 million, which is not a lot, were invested by 5 teams. But the point is, those 5 teams of super investors, they have really smart and large teams of analysts. So Paul Tudor Jones has run his due diligence. He has a full team of analysts running due diligence on CME, and that's what I'm looking for. Okay, Paul Tudor Jones II, who's a legend, bought recently in Q1. Prime Cap Management bought. Joel Greenblatt bought. Ron Barron, who is the genius who's buying the most risky, but also doing a great job. And then Jim Simons, the mathematician, legendary investor. So if we go into here, we're not alone. There are teams that have done due diligence much more precise than what I could ever do with my limited time and resources here. So this is CME Group, and in the next video I'll show you the next stock that's on my watch list. At the current moment I don't hold CME Group, but I have decided that I will add CME position to our public portfolio over the next 12 months. So this year we'll be accumulating CME Group, and I will share also where I take them from. If you want the live trades, make sure you are in our Slack group. That's strategysprints.com, and then you click community. And we have a workshop on pricing power coming up. So if you're running a business, if you're even a solopreneur or a small business and you want to increase your pricing power, make sure you join our workshop soon. I post on X regularly the dates. See you soon, everyone.